The government's announced a new investor visa. Throwing $2 million into a Kiwi company will get you a fast track to residency. And we'll have Erica Stanford on this on the show after 7:30 this morning. It comes as Wellington struggles to fire up economically. In fact, many of our cities do. Wellington's economy, though, is shrinking. 177 businesses shut in a year. Nick Brunsdon, Infometrics principal economist, joins us from the capital this morning. He's been looking into this. Nick, good morning.
Morning, Ryan.
Let's start with this new visa to bring the cash into our cities. Do you think it's what effect do you think it will have? Is it a major?
It's hard to say exactly how much we'll have. We don't always track investors that well, but we know the previous iteration where we had a sort of $5 million threshold, we had about 100 applications over the past year. This change would bring that threshold down to about 2 million, which I think brings it into the reach of many, many more people being able to afford at that level.
Is this the type of policy you would bring in if you were targeting those cities like Wellington we're about to talk about?
I think it will definitely help. I mean, particularly if you think about Wellington, a lot of the pain there has come from changes in the public sector, and the city does need to reorientate itself a little bit more towards the private sector, use some of the skills that it's got in the city, for ventures other than the public sector. And so I think if we can kickstart the private sector with some investment to use the skills we've already got in the city, that's got to be a win.
You mentioned the public sector, and Nicola Willis yesterday sort of conceding that, yes, a big part of Wellington's downturn has been because of the job cuts that have taken place there. Do we know how much is down to the job cuts, how much is down to interest rates, the rest of the general economic situation?
So the thing in Wellington is that the public sector is that focus, but there's so much of the private sector that wraps around the public sector. Things like consultants, things like recruitment, and sort of labour placement, those sectors, and they've actually been hit slightly harder, and that makes sense. The government, firstly cuts back on what it's spending on consultants, and then it cuts down on the number of people that it's got employed directly in those agencies. So we've seen in those kind of private sector hangers-on, we've seen more job losses than we have seen in the core public sector over the past year. Beyond that, it's the hospitality in the city. Obviously, if people aren't employed or they're worried about their jobs, they're not spending so much on their coffees and their dinners, and that's really hit hospitality as well. And then flowing through to construction, if people aren't certain about their jobs, they're not spending to extend their house or buy a bigger house. So we've seen declines in house prices, quite substantial job losses in construction in the city as well. Some of that's interest rates, but it's probably it's been harder hit in Wellington, which suggests it's more those job losses.
Do you reckon they've hit rock bottom yet, Nick?
I think so. So in terms of GDP, so economic activity, that's actually up 0.2% in Wellington in the June quarter. So it shows that the level of activity is picking up off the bottom. The challenge is that we have so much spare capacity in the economy that most businesses, they can handle a little bit more work without having to hire people. So we're probably a few quarters away, maybe next year, when businesses start reaching that point where the activity's grown so much they actually need to hire people. So activity's up, employment's still at rock bottom and not really picking up off rock bottom just yet.